Hello and welcome to the weekly commodity market update. I'm your host, Brownfield anchor Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben.
Good morning, Will.
And then Ben, can I just get a little bit of your background for first-time watchers?
Yeah, sure can. So I'm an extension economist here at the University of Missouri, stationed or based here in Columbia, but sort of a statewide appointment. I also work with the Food and Ag Policy Research Institute here at the university as well. I grew up on my family's row crop and cattle operation in West Central Missouri. And this time of the year, I'm spending a lot of time out and around the state visiting with the good folks of Missouri.
All right. Well, starting off the program, can you tell me what you've seen from the market this past week? What type of changes were there?
Yeah, I think probably not any surprise to people that watch the markets. We had sharp upticks for the majority of the commodities across the board, at least on the grain and oilseed side. Old crop corn for May was up 60 cents. New crop corn for December up 35 cents to $6.42. Old crop soybeans for May up 23 cents. New crop soybeans for November up 18 cents to 14.53. Looking at the soybean oil or soybean component contract, soybean oil was up 1.5 cents per pound to $74 or 74 cents per pound there, which is, again, that vegetable complex just continues to move higher. Soybean meal up $12.70 per short ton. And then the big ones on the week were old crop wheat for May at up $3.60 to $12.94, taking out the old record high for wheat in the nearby contract. And then new crop July wheat up $3.53 to $12.52.
So looking at the adjustments from last week in prices and kind of encouraging some more marketing of grain, what types of adjustments have we seen in the basis?
Yeah, as future prices have rallied higher, that's encouraged farmers selling at the elevator, which is then kind of pushed down basis. However, I think for most people across the country, the increases in future prices have offset a lot of those basis adjustments down. So again, we've seen some wider basis in some contracts like wheat, where we've seen elevators or buyers, merchandisers move to a deferred contract as kind of their base value there. We've seen those basis values really widen out. And in some cases, local elevators have just stopped offering new crop wheat bids. So certainly some very weakening of basis for all crops across the board, across the country.
What kind of market drivers really led us here? What have been the highlights from the past week?
Yeah, these are just the ones I've picked out. Certainly, I'm sure there's others, but at least the ones that I've picked out for headlines, I guess, on the week is the Chicago wheat futures contract increased 38.5% week over week. That's an all-time record for increases in the wheat contract on 1 week. U.S. ethanol production decreased 27,000 barrels per day for the most recent week of data. Ethanol stocks also decreased on that lower production volume. New export sales last week were disappointing for corn, soybeans, and corn, soybean meal, and soybean oil. Those came in very soft on the week, but international buyers continue to show interest in new crop soybeans. And we've seen interest in old crop soybeans from the United States as well, as our bids and values here in the United States have become extremely competitive with some of our international competition. Weekly U.S. export inspections this last week were up for corn, soybeans, and wheat, but down, corn, soybeans, and sorghum, but down for wheat. Managed money holdings for corn, soybeans, and wheat all were up collectively. And then probably the other big highlight is the Chinese Ministry of Agriculture announced a resurgence of African swine fever within their country. So something to watch there.
I gotcha. So really talking about competition, like you mentioned there, looking towards South America, which is always seems to be the main competitor for the U.S., especially this time of year, watching the market. What adjustments did we see coming out of several different organizations this past week to their crop outlook?
Sure can. So at the beginning of the month, we always get fresh waves of private estimates for data, and that's what we certainly saw last week. StoneX was one of the first ones that came out. They cut their Brazil forecast for soybean production from 126.5 million tons last month to 121.2 million metric tons this month. That's down 24 million metric tons from their first estimate of the season all the way back last fall. It was estimated at a record 145 million metric tons. They weren't alone. Ag Resource Company released their crop estimates for Brazil as well, coming in below 120 million metric tons. So that's the first one, at least I've seen, below 120 million metric tons. And then AgRule, which is a Brazilian forecasting agency, lowered their forecast this month about 6 million metric tons, down to 122.8 million metric tons for Brazilian soybean production. So across the board, some revisions expected there. The United States Department of Ag lowered their forecast in February, but they sit well above 10 to 15 million metric tons above all of those private estimates. And so I do expect some type of revision here in March to the USDA balance sheet. How big is always a question. USDA tends to make smaller revisions than what some of these private estimates do. And so the market is currently anticipating USDA to come in somewhere around 129 million metric tons. Still, that's down 6 million or 5 million from where they were in February, but still roughly 7 to 9 million metric tons above all these private estimates.
So a lot of the time when we're talking about South America, a lot of the conversation is how much has the diminishing crops conditions already been priced into the market. So at what point do we see that really return to a market driving situation as the crops might be going downhill?
Well, so that's a really good question. I think we've seen a lot of it on the soybean side already, and that's certainly the crop that we've spent a lot of time talking about. I know southern Brazil got a lot of attention to their corn crop because their corn crop was significantly impacted, represents about 25% of their total production, primarily livestock uses is what that corn goes for. Brazil is an interesting case in the fact that they still get to respond before the United States in terms of corn planting. So their second crop, that safrinha crop, which is the bigger of the three, it represents about 75% of their total production is what's going in the ground right now. And I'll come back to soybeans for just a second, but I just want to iterate that when we've seen cuts to South America's corn production for their first crop, a lot of cases it's being offset with increased acreage in their second crop, leaving that total corn production flat on the month. The concern is if this La Nina continues to fade in South America and the Pacific Ocean changes enough that we come out of that La Nina conditions in South America and it turns dry in that central to northern part of Brazil, that the corn crop could be significantly impacted. And so we haven't, to my knowledge, or at least in my impression of the markets, factored that in yet. We factored a lot of the soybean rally in, and we're now just waiting to see, okay, do international buyers come into the market and buy soybeans? It has two impacts. Higher prices are often cited as a cure for higher prices, and as prices go up, we expect demand to curtail a little bit, and we've seen that in the Chinese market. Their feeding margins for hogs due to high soybean prices have been soft, and as a result, we just haven't seen them buy as many soybeans as what I think we normally see them buy with cheaper soybean prices. So.
Well, looking at a little bit of a gear shift, looking forward now, we have a new WASDE U.S. World Ag Supply Demand estimate coming out from USDA coming up. What should farmers be expecting there?
But the big ones to watch out for here in March are the South American production estimates, both on the soybean and corn side. Again, I'm not expecting many fireworks on the corn side, even though we could see USDA revise Argentina corn production. They've been very hesitant so far to do so, and it's not going to be a big revision, maybe 1 or 2 million metric tons, which is, I guess, big as a relative term, but certainly nothing like what we're seeing on the soybean side. As a complex, though, keep an eye out for total Brazil, Argentina, Uruguay, and Paraguay soybean production. Could see some significant adjustments on the soybean side. So that's probably the biggest thing. The next thing is just that at least I'll be looking for is do we see adjustments to global export and global trade? Especially if there's large revisions to South America. We haven't seen the corresponding shift to other international locations. Do we see that in this report or not is probably a question. Not making any substantial adjustments would be bearish to the market. And we certainly have not seen large revisions the last couple of months in that category.
So really, South American weather still playing obviously, and will continue to play a huge role in corn and soybean, the markets there. But looking domestically, just touching on weather, in the Western Plains, and looking at the wheat market, how much of a factor does that remain to be?
Well, I think so. I'm not sure I totally understand the question, but I'll just say that from a fundamental standpoint, the dryness out west certainly has big concern for our wheat crop as we move through this spring. And if it continues to stay dry like it is, our western wheat crop in the plains states becomes threatened. I would say that. As to is that being a factor in the market now, I would say no. I don't think we've started to factor in dryness in the western part of the plains impacting that wheat crop. A couple of reasons for that. One, I think it's still too early really to start factoring that in. The second reason is the wheat market has completely shifted to focus on geopolitical tensions. The big one being Russia and Ukraine, but even some market factors, I guess, that play into this. So almost a year ago, the world watched as GameStop is my example. The company really didn't change in fundamentals. It was still the same store that was in a lot of malls and corner businesses on the side of the street. Rarely seeing much positive to it, kind of constant decline. But we saw shares of GameStop go from like $20 a share to over $450 a share within a really short period of time. And we're seeing that same situation play out in the wheat market. We call these short squeezes. Basically, there's short players in the market that have bet that the market would come down. And if you remember from the onset of the pandemic, or not the pandemic, the onset of this tension in Russia and Ukraine, there was some bearish fundamentals in wheat, and wheat was trading down. So speculators got in, made a bet that the wheat market would fall. As the wheat price started to rally due to the geopolitical tensions in Russia and Ukraine, it's caused that price to shoot up. They then have to cancel out of their short positions by buying back a contract. And when they buy back a contract, that gives an extra bullish signal to the markets and sends it higher. And again, we go through that cycle. So we've got what I would call a broken market at the moment. And certainly it's not based on fundamentals. And the risk to the wheat market is it's going to continue to go higher until the last short is out of the market, until they've canceled out and liquidated their position. Then when that happens, there's really no fundamentals under this market, and it's going to come crashing down, right? We've seen this time and time again with other commodities or other stocks. I use GameStop kind of as my example. When that happens, no one knows, right? Like that's the trick, is when is the last short out of the market? My take home message here right now is the wheat market is going to remain incredibly volatile, and we could see a limit up and a limit down in the same day. And we could trade limit down for a couple of days in a row. And that's causing a lot of uncertainty for the cash wheat market as well.
Oh, what types of things do farmers need to be watching for this coming week?
Yeah, so this coming week, the big one is Wednesday with a whole series of data coming out for USDA. We've got the USDA World Ag Outlook numbers coming out that we talked about just briefly earlier on Wednesday, and have implications for the market. Of course, the big thing is any resolution to Ukraine and Russia's conflict.
And then the last thing I want to touch on, something we spoke about earlier, the administration talking about a change in policy handling Russian oil. What impacts might that have on the market, if any?
Yeah, so we did see where we heard grumblings this morning. I don't think the official announcements come out, at least at this taping. Maybe it did while we were taping, that the U.S. would ban imports of Russian oil. We don't import a lot of Russia oil, but certainly it has. If more countries start to follow that does create some shortness of supply on the world market, and of course then impacts us here in the United States as well. It's been interesting. The European Union, especially countries like Germany, so far haven't taken that case or that stance. So we could see a little bit of reallocation for just a short period of time here, but certainly it's going to have an impact on oil markets. Over the weekend, after the U.S. Secretary of State announced that this was a possibility, oil prices shot up to $139 per barrel, which is just short of the all-time high of $144 a barrel. So, we'll continue to see oil prices remain in this extremely volatile state and at elevated levels. And of course, then that'll trickle down to the gas pump as well.
All right. Well, reports to watch this coming week. Again, tomorrow, the USDA's World Ag Supply and Demand report. We also have an ethanol report coming out on Wednesday, and then export sales that comes out on Thursday. Thank you for joining us this morning. If you'd like to see more content from Brownfield, visit brownfieldagnews.com. Thank you, Ben. I'm Will Robinson on Brownfield.